It's back to normal in San Jose's apartment market, and that means very tight occupancy rates and big rent growth. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your San Jose update. And let's get right to it. Overall occupancy in San Jose is now at 97%. That stands among the most elite rates in the country. That is up 2.2 points in the past year. And now occupancy is back in line with the rent rate seen prior to the recession. And vacancies are few and far between everywhere. Every product age group and every submarket. In fact, if you look at the differentiation in occupancy rates between submarket, it ranges from great to fantastic. The lowest occupancy rate among San Jose submarkets is 96%, and the highest rate is at 98.2%. And with occupancy rates in such strong shape, you know operators and owners here would not be able to resist pushing up rental rates, and that they have. Same-store rental rates jumped 3.4% in third quarter, following a jump of 3.2% in the second quarter. And on an annual basis, same-store rents are up 5.5%, one of the biggest increases in the country. So why the big rent growth in San Jose? Well, for one, San Jose proportionately hasn't lost as many jobs as other California markets in the Bay Area or especially in Southern California. But we think there's a bigger factor at play here. Let's pull up the occupancy chart again. As you see, occupancy never really got particularly bad here. It was at 97% back in 2Q 2008, and then it falls over the next three quarters to bottom out at 94.4%. So rock bottom in San Jose was 94.4%, still in pretty good shape. And then beginning in 2Q 2009, occupancy rates start shooting up again. Now let's look at quarterly rent change over that same period. You see that even though occupancy never got very weak, operators' owners were slashing rents hard as if occupancy rates were in the tank. Rents plunged more than 15% between third quarter 2008 through the end of 2009, way more than they probably needed. So it looks like what might have happened is that operators may have overreacted to the dire headlines about the economy back in late 2008, early 2009, when occupancy rates still weren't that bad, and now they're starting to correct for that over-adjustment from that time period. So now we're seeing very big rent growth. So far in calendar 2010, same-store rents are up about 8%. Now let's look at this story on a submarket level. We're going to put up a chart here showing all 6 San Jose submarkets, and you're going to see rent cuts between third quarter 2008 and the end of the year of 2009, followed by rent growth so far in calendar 2010. And you see in Mountain View, Sunnyvale, rent rates fell 17.2% during the recession, and they are up more than 10% already so far in 2010. You see big numbers also in the Palo Alto, Los Altos, Cupertino submarket, and really everywhere. And even at the bottom of this list, in town San Jose, rents fell about 12% during the recession. They're up only about 2.5% so far in 2010, but they're still moving up. And looking at the San Jose Metro as a whole, this is one where we could see significant rent growth continue into 2011. Remember, this is a market where double-digit annual rent growth is not uncommon, and we're always asked what's going to be the next big market in 2011. Well, when we're talking about rent growth, it's very likely that San Jose could lead the nation in rent growth for 2011. And that wraps us up for today. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.